Hey everyone. Disney's stock price has been an interesting one for me to follow over the last few years. Its stock price is down off the highs it reached during the pandemic, strangely, when its businesses were shut down and people couldn't go to the theme parks, hotels, or cruise ships. Its stock price reached all-time high or very, very high levels. And now the stock price is down significantly from those highs that it reached during the pandemic when its businesses are arguably firing on all cylinders. Theme parks are booming, cruise ships are full, and hotels and theme parks are doing absolutely well. So, what gives with Disney stock? It's an interesting one, right? So, I'm going to look at Disney. I'm going to look at its prospects, its estimates, its forecasts, and answer where I think Disney stock could be 2 years from now.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So, one of the numbers I'm going to need to estimate where Disney stock price could be is the forward price to earnings ratio. And right now, Disney is trading at near the lowest valuation at a forward price to earnings of 18.35. It's close to the cheapest you've been able to buy Disney stock in the last few years. Like I mentioned, the valuation of the stock has been falling as the prospects of the business have been increasing. It's an interesting dichotomy here with Disney stock. I will say that one of the areas of the business that is not doing well is the legacy cable segment, but that area hasn't been doing well since 2016. This is not a surprise. People have been canceling their cable subscriptions in favor of streaming since 2016. Admittedly, this trend has worsened in the last couple of years, but this is something that investors have known about Disney stock since 2016. They've known that Disney's going to lose millions of cable subscribers. They're going to switch to streaming instead. That's not a new thing. So it's interesting that that downside is causing this kind of discount in Disney's valuation. I'm also going to need Disney's current selling price. Right now, Disney's stock price is $96.73. I mentioned it's way down from the highs of over $200 per share in 2021 at a time when the business was mostly shut down. The only part of the business that was doing well during 2021 was the streaming segment, and still that segment was growing, yes, but excuse me, it was still losing billions of dollars. But the part of the company that was the cash cow, the profit machine, which is the theme parks, the hotels, the cruise ship segment, that part of the business was shut down for nearly all of 2021. Most of the businesses were shut down in nearly all of 2021. So interesting to be sure. Right. I also need the forecast from Wall Street of where they think Disney's earnings per share will be in 2026, fiscal year 2026. And Wall Street thinks Disney's earnings per share will grow to $6.29. That will be up from $5.22 in fiscal year 2025 and up from $4.30 in fiscal year 2024. So Wall Street thinks robust earnings growth is on the horizon for Disney over the next few fiscal years. And I tend to agree with Wall Street analysts on Disney stock and the growth in earnings per share and profitability. If you look at Disney's cash flow from operations, and you could see it's way below the levels pre-pandemic, even though it's been jumping up since the economic reopening. 9.866 billion of cash flow from operations is still below the nearly 14 billion the company was generating pre-pandemic, and management said that in 2024 its cash flow is going to increase meaningfully. So even management says and agrees that, you know what, our business is doing really well, theme parks are booming, streaming segment will become profitable by the end of the year, and so that's going to lead to increasing cash flow. Oh, on top of that, new CEO Bob Iger, well, used to be the CEO, then retired, and now he's back. He's made massive cost cuts, job cuts, and so that's going to also lead to billions of dollars of increase in profitability and increase in cash flow. If you look at operating income, 8.99 billion as of its most recent update. Let me update and refresh this. it's still way below the nearly 14 billion of operating income it generated pre-pandemic. So even though it's rebounding, you can see it rebounding, it's still got a lot of room to go before it reaches those levels. Now, I'm not saying for sure it's going to reach these levels of operating profitability, but I think most likely it will. I think the streaming segment, as those losses end, right? For the last few years, Disney has been pouring billions of dollars investing in the growth of the streaming segment. That's all going to turn profitable, according to management, by the end of 2024. So going forward, that's going to be another segment. Instead of generating losses, it's going to be generating profits, and that's going to just increase as time goes on, as more price increases come in, as more subscribers join, as the content spend decreases, as the marketing spending decreases. That will lead to further profitability in that segment. Now, I know a lot of investors have been down on Disney's streaming segment, saying that it's going to be less profitable than the legacy cable segment was. And I agree with that. I think the legacy cable bundle was especially good for Disney, and I don't think it's going to be that good in the streaming segment. Although I think that's going to be somewhat offset by the fact that when streaming was introduced, overall content demand increased because people now can watch content anywhere they take their phone or anywhere they take their tablet. Previously, you could only watch Disney content when you were at home in front of your TV. Now, if you're on campus at university in the library, you can open your laptop, open your phone, open your tablet, and watch Disney Plus. Or if you're a sports fan, you can watch ESPN Plus while you're on campus, while you're on the train, while you're on the bus, while you're away from home, you can still watch Disney content wherever you are. Or let's say you're a household with 4 or 5 individuals and you only have one TV in the house or 2 TVs in the house, and more people want to watch. Now there's more content being consumed because you have 4 or 5 individuals all watching their own preferred content, and you have 5 or 4 different content being streamed all at once. So overall, streaming is going to lead to an increase in demand for content, which I think is going to offset some of the decrease in profitability that Disney experienced from the legacy cable segment. All right, so let's bring it all together. If Disney's earnings per share does come in at $6.29 in 2025, as is expected according to Wall Street estimates. I'm sorry, this should say 2026. Let me fix this on the fly as we move forward. The price to earnings forward ratio stays the same at 18.35 as we got from this current valuation here. If those two numbers come in as expected, Disney's stock price could be $115 per share 2 years from now. That would be a nice increase from the $96 per share Disney's currently trading at. That would be a nearly $20 per share increase, or an increase of more than 20% over the next 2 years. That would be solid for Disney stock investors. But what if after Disney demonstrates profitability in the streaming segment and the rest of its business continues to boom? What if investors say, all right, we're willing to pay a better valuation for Disney now that it's proven it can generate profits in the streaming segment? Then the stock price could rise to $125 per share. But if investors become really enthusiastic about Disney stock and the PE forward rises to 25, Disney stock price could rise to $157 per share, a scenario that I think is less likely. But what if Disney has more difficulty in the streaming segment and valuation falls to 14? Then the stock price could fall to $88 per share, which would not be very much below where it's at now. It would be a slight decrease. That shows you the power of the profitability increase that Disney is going to demonstrate over the next couple of years. I should say Disney is expected to demonstrate over the next couple of years. That boost in profitability creates a nice floor under the valuation if Disney does indeed deliver those kinds of earnings, because valuation is already cheap, right? I've shown you the price to earnings. It's already near the cheapest it's been. So how much lower can it go? Let's say 14. that would be below where it was before, right? That would be the lowest it's been. And so there's a bit of a floor under that valuation if you indeed deliver growing profitability. That's what's the good news for Disney stock investors. In my opinion, the most likely scenario is for Disney stock price to be around this $115 per share, maybe a little bit above. I would say between 115 and 125 per share for the next 2 years, or by the end of the next 2 years. If you liked the video you just saw and you want to see more just like it, please subscribe to the channel. I can't keep this channel free without the support of viewers like you. And if you're already subscribed, thank you, and I appreciate your support.